When you look at what Janet Yellen said yesterday, the market interprets it as we don't really know. So we've had clues. It looks like we'll have an interest rate hike this year. Is it looking like September?
There's a 60% chance priced by the markets for a rate hike in September. We do assign a higher probability to that thanks to the improved data landscape, but also to the fact that the Fed has changed recently its language towards a more hawkish stance.
The one word that everybody seems to be obsessing over is some. They just want to see some more improvement in the jobs market. Now, there's 2 more jobs reports between now and September, and that's all going to be down to a focus on the wages. Is that what you're focused on?
Yeah, we don't really care about the number of jobs that are being added. There's an average of 210,000 this year, 260,000 last year. What really matters is, do we see wage inflation rising, yes or no? That's the key point for the Fed in order to trigger a rate hike.
Alessandro, when you say the higher, you believe that it will happen in September, right? If the market's pricing the 60% probability, you say we have it higher. Do you think it's a done deal for September unless we have surprises to the downside in terms of wage growth and employment?
I think that's not only due to domestic factors. The surprises could come also from the international front. So if we had further decline in energy components, in commodity prices, then perhaps the Fed may change its long-held tradition of seeing energy components in the CPI report as being transitory. So they may assign a more structural value to that.
Alessandro, let's talk about, some people are sort of saying, look, pulling the trigger is a done deal for 2015. Whether they go in September or December is perhaps not the most important thing to the market. What matters the most in 2016 is how quickly they ratchet up the hikes. Now, if we look at where the Fed says rates will be going into next year, they say 1.6% in 2016. The market is pricing in something a little bit less. So the market's actually more dovish than the Fed. Who has got to right-size themselves?
I think the market at the moment is taking a very, let's say, cautious view of what's going to happen. They're basically saying it's not going to happen like in 2004 and 2005 when Greenspan had this very fast rise in interest rates following the dot-com recession. I think the market's also taking the view that the terminal rate, so the equilibrium rate at which the Fed ultimately will settle, is much lower due to the fact that we have a much lower real natural rate of interest.
Alessandro, we had a guest on earlier this week, and this was a quite well-known strategist, and he was saying there's a big chance that actually if they raise too soon, then they reverse. But that's okay, he was saying, because actually it doesn't matter on their credibility too much. They need to be quickly to act. Do you think there is a danger if data comes in a little bit soft, if, for example, the situation worsens in China, that if they raise too soon, they may have to do a reversal early next year?
I think a policy error is always in the cards when you are a central banker, but this is exactly why the Fed is taking its time. They don't want to overtime it. They don't want to do it too early, and they always want to see whether there is a risk of some external developments affecting their decision.
One of our editors wrote a Bloomberg View piece, and he said the biggest threat to the Fed is that China essentially is doing quantitative easing by supporting the stock market. And the biggest risk is China could begin to sell dollars. That potentially is one of the biggest unknown threats to the Fed policy. What do you think of that?
What else, is a reserve currency in the world apart from the dollar? The euro, maybe, but it's very...
That's the lowest in many years, though, isn't it?
It's very unlikely to see a big shift in reserve currency compositions across central banks. So you've got to take a view that the dollar will remain and still is a reserve currency for most central banks, and it won't change that fast.